Good day, ladies and gentlemen. So if you are a struggling trader, then today is your lucky day, as I'll be giving you a very powerful model which you can use to start trading. Okay, so you have to go and backtest this model. So this model I'm giving you today is a model for serious traders. Okay, if you're not serious, then this model is not for you, because unlike the other examples, the other systems that I give on this channel, I'm only going to give you one example. You know, when I do a video talking about a trading system, most times I try to give you up to like 3 to 4 examples so that you understand it very well. But when it comes to this particular one, I'm only going to give you one example. So you need to be a serious trader to actually be able to go back and backtest it and master it. Okay, so one of the reasons why I'm giving just one example is the fact that for this particular trading system, you'll be going from one time frame to the other. Okay, so I don't want to just keep jumping from one time frame to another time frame. It might end up looking more confusing. So I just have one example where I'll be moving from one time frame to another time frame. So basically, for this particular trading system, you need the 4-hour time frame. So you need the 4 each time frame, and the entry time frame is going to be the 15-minute time frame. It's actually a simple trading system. Okay, the concept is simple. When I explain it, you get to understand it. So you're using the 4-hour time frame and the 15-minute time frame. And for those of us that happen to love the 5-minute time frame, you love the 5-minute chart, then what you should do is you can combine the 1-hour time frame with your 5 minutes time frame. You can do this combination. But personally, I use this system. If I want to trade this system, I would prefer to use 4-hour and 15 minutes. Okay, so without further ado, let's jump right into it. So the concept you need to master in order to use this strategy is fair value gap. So a lot of traders already know what a fair value gap is. If you don't know what a fair value gap is, this is a gap that is formed between a 3 candle sequence. So let's say you have 3 candles like this. All right, you have something like this. Let me make this one bigger, and then you have another candle right here. Okay, so when the wick of the 3rd candle does not intersect with the wick of the 1st candle, what you have in between that is what we call a fair value gap. Okay, so what you are going to be doing is you are not just using any fair value gap, you are using the most recent fair value gap. So you're going to be jumping from one fair value gap to another fair value gap to another fair value gap. I will show you an example so you understand what I mean. So when you draw a fair value gap and it does not work, it doesn't get tapped into, and a new fair value gap gets created, that new fair value gap that gets created becomes your priority, what's it called, becomes the fair value gap you prioritize. Okay, it becomes the high priority fair value gap, let me put it that way. Okay, so if a new fair value gap is created after that one without the former one being filled, the new fair value gap becomes your high priority fair value gap. So that's the one you're going to be utilizing. So for me, like I said, I prefer using combining the 4-hour time frame and the 15-minute time frame. So here I am right now on the 4-hour time frame. So this is the H4 time frame. Okay, I do a lot of analysis on this pair, so I'm sorry if it's a little bit messy. You can see the way I have so many arrows on the screen. So let me keep this here. Okay, so what do you see happening right here? So this is the example I want to give you. We had bullish candles coming in, right, and creating fair value gap. So let me see if I have a fair value gap. I have a fair value gap right here. Hope you can see that. Let me use 2 horizontal lines to depict the fair value gap that is here. So the wick of this candle did not intersect with the wick of this other candle right here. So can you see that there's a fair value gap right here? This was my first fair value gap, but the fair value gap was not traded back into. Instead, price kept moving in the upward direction, creating another fair value gap. So that other fair value gap becomes your new fair value gap that you will be looking out for price to fill. You can see I've moved the horizontal lines to the new fair value gap that was created. Okay, So you wait to see if it's going to be tapped into. At this point, let me see. I think it got tapped into. Okay, it was not tapped into. It was not tapped into. Price just displaced in the upward direction, creating a new fair value gap. So this new fair value gap becomes your priority fair value gap. So let me delete this one. Okay. So you just keep moving as the fair value gaps are being created. You move to the most recent one. The most recent one is the one you want to use. Okay, the one that price taps into. And if price does not tap into it and creates a new fair value gap in the same direction, that becomes your priority fair value gap. Okay, so right now, this is the most recent fair value gap created. No other fair value gap was created in the upward direction. Then price did what? Price came back to the fair value gap. Now, once price touches your fair value gap, you are moving to a lower time frame. Okay, so this at this point, let me show you what I'm trying to do so you understand what I'm trying to do. At this point, price tapped into the fair value gap, right? So since this is not a current price action, I want to use a vertical line. This yellow vertical line, I want to use it to depict where price touched the fair value gap, so that when I go to the lower time frame, I'll know where to stop. I'll be able to locate it. Okay, so now I'm moving to the 15 minutes time frame. So this is 4 hour and I'm moving to the 15 minutes time frame. Okay, so on the 15 minutes time frame, I'm looking for the vertical yellow line, and I'm also going to see my big 4 hour fair value gap. Let me zoom out so it becomes faster. Okay, so look at this. Okay, so this is where price started moving towards our fair value gap. Then it came and touched it right here. Okay, it tapped into it right here. So I can now remove this this vertical line and take it out. Okay, so I've taken out the vertical line, and you can see this is my this is my 4 hour fair value gap. You can see how big it is. This is the 4 hour fair value gap, right? So what you're trying to do when you come into your 15 minutes time frame, which is your lower time frame, which is your entry time frame, you're looking for another fair value gap. The first fair value gap that is formed in the upward direction is what you want to trade. Remember, this 4 hour fair value gap right here is a bullish fair value gap. I hope you remember. Okay, it's a bullish fair value gap, and bullish fair value gaps are there to push price upwards, while bearish fair value gaps are there to push price downwards. So this is an example of a bullish fair value gap. So price coming down here does not mean that you are in a downtrend. No, price is simply retracing into the fair value gap in order to continue in the upwards direction, right? So we want to catch that upwards move, but in case it is a full-blown reversal, we don't want to get caught on the wrong side of the market. So that's the reason why we are not going to be taking our trade immediately price gets to the fair value gap. So we are trying to play smart. So what we want to do is we want price to show us that it really wants to push in the upward direction. And how are we going to confirm that? We wait for a fair value gap, after price has touched the bigger fair value gap. Okay, so we wait for a bullish fair value gap to form, and then we try to enter with that. Okay, so let me zoom in, and now that I've zoomed in, I hope you can see clearly that I have a fair value gap right here. Okay, so I'm going to get I'm thinking probably I should just use these horizontal lines, but I want the what's it called I want the 4 hour fair value gap to still be on the chart, so everything is going to be clear. Let me change this one's color. What color should I use? Let me use red. Okay, save. Alright, so this is my 15 minutes fair value gap now. Let me copy that. Okay, So this is the 15 minutes fair value gap that was formed. So I'm entering a buy trade instantly as price gets back to my 15 minutes fair value gap instantly. So you can see when price got here, you enter the trade and you move in the upward direction. You can target 1 to 2 risk to reward ratio. This is going to play out for you most times with 1 to 2. Okay, sometimes it can give you 1 to 3, 1 to 4, but just go for 1 to 2. You are going to win more trades with 1 to 2. Okay, so you can see the way, let's say our take profit was somewhere here. This is more than 1 to 2, but you can see the way price went and smashed our TP. Okay, this is more than 1 to 2. Okay, this particular trade would have given you up to 1 to 3 if you even took it up to this point. Okay, so your stop loss is going to go a few pips below the 15 minutes fair value gap. All right, then your take profits, like I told you, just go for 1 to 2, but in this particular case it gave us 1 to 3. And if you are the type that like to stack trades, okay, I'm not advising you to stack trades if you're a beginner trader. Please, you need to pay attention. I'm not advising you to do that if you're a beginner trader. Stacking of trades, is for those that are more experienced. For someone like me, I can decide to stack this trade because I understand that for me to have another fair value gap here, okay, so I've entered on this fair value gap, right, and I'm currently in profit. I can see that another fair value gap was created right here. Can you see that? Let me use another what's it called, horizontal lines to okay, so this is another fair value gap that was created. For this fair value gap to be created, it shows that price still wants to push in the opposite direction. So I can enter another trade when price retraces back into this other fair value gap again. Then I'll be making more profits than just taking a single trade. You can see the way price move from this external range liquidity into internal range liquidity, then pushed up, clearing external range liquidity again. Okay, so if you don't understand what I just said, that's probably a more advanced stuff, which like I said, just focus on the basics. Okay, move from your 4 hour to your 15 minutes. 15 minutes, first fair value gap in your direction, you enter, target 1 to 2, you are good to go. Okay, so if you have any question, feel free to ask me in the comment section. If you are a new viewer, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.